Bitcoin breaks below $75,000 as $150 million in longs. Get liquidated Bitcoin traded below $75,000 in early Asia hours on May 28, 2026, with derivatives data showing more than $150 million in long positions liquidated over the prior 4 hours. The break came after several sessions of grinding lower and snapped a key psychological level that bulls had been defending since the Golden Crosswatch built around 75K earlier in the week. As of May 28, 2026, BTC was changing hands at 74,083, down 2.1% on the day and roughly 5% on the week, according to live market data. ETH sat at 2,014, down 2.7% on the day and 6% on the week. The CoinMarketCap Fear and Greed Index printed 33, firmly in fear territory. The 4-hour flush, the liquidation cluster, was concentrated in the move from roughly $76,200 down to the $74,800s. Long positions taken on the way down to 75K, where many traders treated the round number as a floor, were forced out as price kept slipping. Coin Bureau pegged the 4-hour long liquidation total at over $150 million. That number is meaningful for two reasons. First, it shows there was real leverage stacked against a defense of 75K hours rather than spot demand. Second, the fact that price kept falling after the liquidations cleared suggests the bid was thin even with forced shorts on the way back up. A weak week across the majors. This was not an isolated Bitcoin move. The sell-off hit the whole top of the table. SOL traded at 81.98, down 1.95% on the day and 5.35% on the week. XRP printed 130, down 2% on the day and just under 6% on the week. BNB held up the best of the large caps at 643.68, down 1.7% on the day and only 1.6% on the week. The pattern points to a risk-off impulse, rather than a single coin story. Bitcoin and Ether moved roughly in line on the 7-day window, and the smaller large caps did not outperform on the downside as they often do in pure leverage flushes. Macro and flows are the backdrop. The break did not happen in a vacuum. Bitcoin spot ETFs are in the middle of a 6-day outflow streak that has pushed 2026 to the brink of net negative on cumulative flows. BlackRock sold roughly $1 billion in BTC last week per Arkham data, and Bitcoin's apparent demand metric has fallen to 147,000 BTC, the worst reading since December 2025. Layer that against the Fed minutes that recently flipped the rate cut trade into a hike-risk problem, and the macro pressure on long-duration risk assets becomes hard to ignore. Bitcoin has been trading as a high-beta liquidity proxy in this cycle, and the policy backdrop has stopped doing it favors. Reading the fear gauge of fear and greed reading of 33 is not capitulation. The index has printed below 20 multiple times this year, usually near short-term lows. At 33, the market is nervous but not yet flushed. That matters for how to interpret the $150 million liquidation print. It cleared some leverage, but the broader sentiment dial has more room to swing. The leverage trade now needs spot to do the work. Without ETF inflows turning back positive or a clear macro catalyst, bounces are likely to be sold by the same accounts that have been distributing through the past 2 weeks.